All right, Mr. Stock Trader here. Today we are watching Toll Brothers. Actually, we were watching Toll Brothers all week last week. And when you read about what they do, building, marketing, selling, arranging finance, got attached homes there, security technology, home automation, looks like a lumber distribution, all kinds of things there you can read on Yahoo Finance there in the profile. It looked like a great company. Their finances look pretty good. I see profit there, gross profit. I don't see any negatives down the list there. Let's go check the cash flow. All right, so the cash flow, we see a negative investing cash flow, a negative financing cash flow. I don't like seeing any negatives, but they do have an end cash position, and there is not a negative in the free cash flow. And if you look at the technical chart going back to October 25th, 24, and then March 17 there, we had a dip. We had a comeback through October, December, and here we are today, February 17, 2026. So there was quite a battle on the daily coming in to February 13. And as you can see, we're going back and forth, back and forth. But the Bulls seem to be winning the battle on it on Friday. And it ended right here. And the Bulls won the battle and kept it up to 164.71 there on Friday the 13th. Friday the 13th, 2026. And you can see the pushback from the bears on that green candle. Now, as we went through the weekend, and then we had a holiday, President's Day, Family Day in Canada. We started out the day with green candles, and I'll show you that in a second. So we'll switch to the 10-second candles. And in the 10 seconds, we got all kinds of dragonflies there. Dragonfly candles. And they're all green. But in the 10 seconds, we did get some bears pushing down, and we got some bulls pushing back up, as you can see from the wicks. Oh, look at that one. We had quite a push up with the bulls, and the bears knocked that candle down, and there we go. Look at all these dragonflies, and they're all green. All right, so we're going to jump to let's go to the 15-minute candles. All right, with the 15-minute candles, we are seeing quite the battle going on, and this stock has been like this. It's just always a battle here. So look at that. We got the bears really pushed that one down right there, but the bulls knocked out that sleeve there and left the wick behind. But we're getting down to 163. What we did is we put a put in over here at 166. Actually, we got to put in at 165. It's up $30 Canadian, which is not up much. But at least the Bears aren't losing. All right, so in the 15-minute run here, we got the Bears are winning. They're getting it down. We're hitting 162. As we can see from the previous, the Bears are winning this battle, bringing the stock price down. The Bulls are definitely doing their job and putting up quite a battle here. All right, we're sitting at 162. We got the Bulls putting in the Dragonflies. But we got a bigger movement from the Bears. But the Bulls are pushing back. They got almost a half candle back there on the Bulls. So why did we put a put on such a good stock and a good company? This company actually looks really good. I'm definitely bullish on it, but what we got here is going back to, what's that date there? November 25th. We don't know how many of these people sitting here who bought in. We don't know how many of them didn't have stop losses and didn't get taken out, sold out. So they just sat here losing money into April. They're sitting there wondering what to do with this stock. And then they see it starting to come back. We got August 4th, August 11th. She's coming back. Bulls really started pushing her up. Hit resistance here at 149. These people are still sitting up here. Those ones who didn't have stop losses. Maybe some sold there, took the loss. And then to the buyers who were over here, to their chagrin, she started going down again. We got 129 there, the low. Oh, we hit 87 there. There's an 87 low there. Started coming back up. The battle was on between the buyers and the sellers, the Bulls and the Bears. And we came into Friday the 13th. It was quite a clincher. Let's go take a look at the daily candles. So on Friday the 13th, by the end of the day, the Bulls did quite a job on that candle. They got her up to, what was that? Actually got it up to 168, which I think was a new high for the company. But the Bears shot it down back to 166, where there's a lot of people sitting from that. Where was it? These people over here who bought in up here are sitting here at around 163, 166. They're sitting there. And they probably joined the Bears, some of them, in selling out on Friday, and maybe some of them who weren't paying attention are selling today on February 17, 2026. So even though we're bullish on the company in general, we decided to put in a put because we figured those people sitting at that level are going to bring down the stock. So on 3-minute candles, it's quite a battle. We have the Bulls winning again. Got her back up to 162. We have some pushback from the bears. Brought it back down to what was that? 160. What is that? 160 around. We're just going back and forth here. Our put value is barely going up. There's only $29 there. Just cover the commission fees. Let's see what's happening with the indicators. Let's throw in some EMAs. All right, let's throw in a 50-day moving average exponential. Oh, and that's bullish. We're above the 50 moving day. Let's go throw in a simple moving average at about 20-day. All right, so the white line is the 50-day moving average. The blue line is the 20-day moving average. Definitely bullish on this. I don't think puts are a good idea. Stock is above the moving averages there. Just threw in a 7-day green line, 7-day moving average, and it's tighter. But overall, this stock is definitely bullish. And on the 5-minute chart, we're below the moving averages, and we got definitely the bears winning this battle here in the 5-minute. Okay, we're watching the 10-minute, so we're on the 10-minute now. I'm going to tighten this up. Well, now we're back on the 1-minute, trying to decide if we should hang on to that put or just get rid of it. It was not a cheap put. It was a $1,000 put. We don't want to lose money. We don't want to be loose with our money. And we're definitely in general bullish on this stock. So what to do? Let's go see if the insiders are doing anything. Let's see if there's any filings, dividends, and let's definitely see what's happening with earnings calls. Oh my gosh, what a bad time to get in. Looks like there's an earnings call today. Let's see what time this earnings call coming out. Oh no, it's saying the earnings call is tomorrow. Oh boy, we know that implied volatility goes nuts around earnings calls. And we don't know what's going to happen after the earnings call. The stock can go up, it can go down. It's a scary time to be holding an option on it, especially a put option. Because if it goes up, we're done. We're definitely getting way below that 50-day exponential moving average. We're below the 20-day simple moving average, and we're below the 7-day simple moving average. We're pushing $161 a share. Our 165 put just went into the money. But unfortunately, probably because of the implied volatility. Well, the implied volatility doesn't even look bad. But the put's still not worth that much more. Still got only a 52% chance on that delta. For every dollar that the share goes down, we're only getting a value of 52 cents per share. If we wanted to roll the put out, say another month, we'd definitely be using a debit. We'd have to pay some money. But like I said, I'm actually bullish on this stock. So to put the put out longer was just not my plan. What we want to do is anticipate where the put is going to bottom out, or where the price is going to bottom out, and then we're going to buy a call. Because we're definitely bullish on this stock. But because of the earnings call tomorrow, there could be a big pushback. I don't know why it's showing the earnings over there already. Let me go Google it. It is saying here that it was scheduled for tomorrow, but was expected to be released today, actually. We're going to have to assume that that earnings call was not very good because we do have an almost $5 drop in the stock price. So, as the put buyer, we could decide to buy the stock, buy 100 shares right now of Toll Brothers for $16,208. So if we decide buy the stock right now, exercise our put, we can make a $331 profit. And when you make the conversion from the US, because that's US profit, we'd actually be making $452 Canadian. So they say options rarely get exercised, but why would I take a measly $192 right now to sell the contract? That's Canadian when I can take over double that if I just exercise the option. I'm confused here. So I'm fairly new to options, and my understanding is that you make as much profit, if not more, when you're buying and selling puts. But this is the second time I've come up with this where I would make way more money just exercising the shares. I don't understand. All right, so here we are back on the 15-minute chart. I'm starting to think it's not going to go much lower. So maybe we sell that put and get a call now. What to do? Let's take a close look at these candles. The bears are winning. We're still getting pushback from the bulls. Now we got a big pushback on this candle here. Oh, that's a dragonfly, but it is followed by a red solid candle. So the bears definitely beat that out. So we're at a February 10 high here. I really don't think I should hold this put. And I think it's almost time to buy a call. But I am fairly new at this, so I'm not sure what I'm doing here. We are definitely below the moving averages that I set. The white is the 50, the blue is the 20-day, and the green is the 7-day moving average.